Good afternoon. Good afternoon, everyone.
Good afternoon. Hi, everybody.
All right, let me apologize first for the glitch. We really had a technology problem. So, and as a result, let's get straight to our presentation today. I would like to welcome all of you this afternoon. And thank you for joining us on this exciting day as we continue our Sinayo Talk discussions on market-leading topics that are significant and have significant impact on the investment management industry. My name is Babalwa Ngonyama. I am the CEO of Sinayo Group, and it is our pleasure to bring you this insightful webinar, Being a Game Changer and the Impact of AI on Investment Management. So today we have been brought together by our Sinayo Securities business, an independent member of the JSE. And Sinayo Securities is an established and a market-leading provider of top quality security services to all the institutional investors in the country. We established this business so that we can have a positive impact on our society. Our vision as Sinayo Securities is to touch our society by being game changers and shifting the balance. We make it our mission to provide our clients and partners with extraordinary insight that generate tangible impact and enduring wealth. And Sinayo leads through innovative talks and value-added analysis. We bring trends to the market from the source and being the first to market. Our strategic pillars highlight a comprehensive and forward-thinking approach to navigating the dynamic landscape of global finance. The emphasis on being game changers rather than mere award winners reflect a positive mindset that acknowledges the need for constant evaluation in response to changing business and client dynamics. And our proactive mindset recognizes the imperative for constant evolution. We are transformative as Sinayo, and we really encompass, therefore, in that process, advanced trading models. We consider issues of globalization, technological integration, and most important, though, our approach is client-centric. And we believe that understanding the clients deeply and tailoring our services accordingly is key to sustainable growth. So our commitment to staying ahead of the curve aligns with the current trends in the financial services industry, where adaptability and innovation is critical for success. In this session, colleagues, we will therefore explore how artificial intelligence, AI, is reshaping the landscape of investment management. As technology evolves rapidly, so do the strategy and approaches we employ to serve our clients effectively. We'll also take a closer look at Sinayo's unique approach to delivering exceptional client service in this fast-evolving environment. We are bringing to you today Richard Muller, the London-based global analyst and trader, who will be sharing insights on the impact of AI on investment management, as well as Sinayo's approach to generating alpha for our clients and performance. And now, with AI as our ally, we are ready and poised to present our ideas for the approaching AI total wave in investment management. Fasten your seatbelt and let's explore how AI is changing the game in investment management. Prepare your questions as we will be having a discussion with Richard. We would also like to hear from you. Over to you, Richard.
Testing, sound check. There we go. It's not echo. There's no echo to the sound. Right. Everybody can hear me right?
Yes,
So
yes, we get.
We're ready to roll. Okay, so I'm going to share my screen. I need, how do I share the screen? Yeah, I think you need to allow me to share the screen from that end. Share screen, there we go. Share screen. I need my screen active. I can't share at the moment. I can't share. My screen is not allowed. I need, you need to unlock me for screen sharing on that end. I can't share my screen at the moment. Oh, there we go. So I'll share that one. There we go. I'm just doing a check. Yeah, right. There we go. I've got two computers here. One is the one that I check what it looks like that you guys can see. There we go. Right. Artificial intelligence. Wow. Exciting topic, exciting times. This picture, this wave of change that's coming, and it's already started. This picture will, for so many of you, that sunset will be a sunset, will be a sunrise for you if you haven't, you know, the ship sailed already, and if you're not on that boat yet, it's not too late to start canoeing to the main boat. But there's an ocean of change coming in the investment community, driven by artificial intelligence. Now, are you a fighter or are you food? So if you're sitting comfortable where you are right now, you're probably the food. And if you have that sense of angst and anxiety, a little bit anxiety, and you see the opportunity as well as the threats that AI has got to offer for us, then you're probably the fighter. So there's only two scenarios in life. You're either the fighter or you're the food. And I think AI is at the moment going to be a big fighter. And mankind is going to be the food if we don't play our cards right. So that's really the big picture, a view on it. Now, artificial intelligence is at various stages in the hype cycle. Hold on, I need to put my little, so I don't go over the time yet. Yeah, there we go. We're at various stages in the AI adoption. It's early stage for some technologies. It's a little bit later stage for others. You know, ChatGPT has really captured the imagination of the public now. AI has been around since the 50s, actually. It's only more recently that some of these large language models have gained traction, and the public has woken up to the fact that they now can do a lot more advanced searching. Don't get too taken away, because what it really is, the ChatGPT is just a more advanced way of searching for stuff on the internet, for example. And it's if you want to have a simple principle, it's nothing different to the old cut and paste, or, you know, cut copy function, but it's just a lot more advanced. But it's going to become a lot more advanced in the future. Now, the biggest driver for this, for artificial intelligence, is cost savings and improved productivity. It's all about the bottom line, and you can see that why these companies are really spending a lot of money on artificial intelligence, because it really enhances the profit line, it cut costs. And unfortunately, you know, humans in a business is a cost center. Companies want the benefit of the staff's input and productivity, but don't necessarily want to pay for them. Okay, so that's kind of the one thing, is that we are starting to price ourselves out of the employment sphere, because we have all these other fuzzy little things that's coming into play. Like, you know, you can see how big HR departments are these days, and all these human rights laws, employing laws, and all those things. So all these things add to the cost of having a physical or a real person in your business. So the key driver is cost saving and improved productivity, doing more with a lot less. But the benefit of AI is the AI programs run constantly and consistently. Okay, I've had a currency trading platform that was running 24/7, 7 days a week, and it had 11 different strategies that it was trading on. So you can see the benefit of not having 7 traders to be employed, but you can have a platform doing more or less the same thing. And there's no holidays. There's no bonuses to be paid. There's no problems with people, the way you speak to them at the office, some might get offended, some might not. So you can see all these social dynamics as society becomes a little bit more softer. That is going to cause a lot of companies adopting more AI and replacing the human element within the business. So that's kind of the big picture view. And also you have fewer errors if you use AI, but you must remember garbage in is garbage out. So it all depends on what language model or what data your AI has been trained on. So those are some of the things that's the really big picture perspective. The other thing is robots can replace a lot of, will be able to replace a lot of people where there's dangerous jobs and difficult jobs, that there's no room for error. So if you have a robot instead of doing a human that might be tired after a long weekend, etc. So, there's no downtime with artificial intelligence or a robot. So there's some really big trends coming, and that's going to change the social dynamics, and we're going to have a very difficult transition period where the world's going to have to adjust, like, oh, maybe we don't need this excessive population growth, etc. So it's limited. AI is going to help us to reduce the impact on resources, food supply, and things like that, because the more people you replace with AI, further down the food chain, there's less need for housing, there's less need for food production, there's less need for pollution. So you can see where all this is going. The other thing is ethics and morality. That's some of the risks. You can already see some of the AIs in the language models and image generation are a little bit, biased in the way that's trained. So you need to make sure that the AI that you train your data on has to be of high quality. Recently, Google had a problem with some of the images created, on their AI generation platform. One other company, Adobe, has gone the other route. Instead of training with lots of random content on the internet for photographs, they've actually paid photographs to submit 500 photographs of a specific item, and then they trained their AI. So they are focusing on ring fencing reputational risk within the AI space. So I think there's going to be a lot of problems coming through in society with the AI, but there's also going to be a lot of areas in the medical field and things like that where we'll be able to deliver healthcare a lot more efficiently, a lot more remotely, etc. So that's kind of the high level thing. In terms of the stock market and the stocks, we've recently seen the run up in the markets in 2020 and 2021, huge liquidity, rates are still higher, and then the rate cutting cycle started. You can ask Kathy Wood, that lost 14 billion in her ETFs, being too exposed to interest rate sensitive new emerging technology companies. But now the most recent rally that started in October of 2022, you can see how the large cap tech stocks have driven that rally because they've got the cash to spend on AI. They're not so much sensitive to interest rates changes. So that's kind of where we are. We at a new cycle now, a bit of the fluff is out the way. And you got to look at some specific technology areas to invest and in terms of quality of the earnings, etc. So that's a situation where interest rates had an impact in the last 18 months on the stock valuations. A lot of them's come down. There's a lot less fluff in the market than there was before. But you just need to go and look at NVIDIA stock price, and you can see there's a little bit FOMO going on at the moment when a company with such a large market cap can rally so much in such a short space of time. So just be aware, keep in the back of your mind, we're a little bit extended in terms of market price action, so to speak. The other big issue is electricity. Data centers use a lot of electricity. If you're using a chat GPT thing to do a query or write a report for you, it uses 10 to 20 times more energy for the same request if you just did a normal Google search. You see, so that's absolutely critical. We're going to need a lot more sustainable energy sources, and we're going to need a lot less pollution. You can just see how much data we're producing on Instagram and Facebook and all those photographs and videos. The carbon footprint of that is already immense. So data, cost-efficient data and green data, more green energy is going to be the next big thing, other area to help drive economic growth there. So that's a big risk factor. Is we've already got a lot of pollution because of oil and nuclear as well to a certain extent. And we need to address those issues in terms of the data center and the ChatGPT functionality and the power-hungry processes that goes into these type of things. Now, artificial intelligence is really, just to get through some of the definitions, it's a simulation of human intelligence, and I hope in certain cases that it'll become a little bit more intelligent than a lot of people out there, because we sometimes take the shortcut. We don't really think of the bigger picture, and I think if AI can start addressing those things and make people aware of that. But some of the subfields is you've got machine learning, where you can just, you show the AI a few things, and then the AI goes off by itself to classify or recognize things. For example, you can show it a coffee cup and a teacup, and then you say, right, this is what a coffee cup looks like, this is what a teacup looks like, and this is what a red coffee cup looks like. Since the AI already knows what colors you've got into the database, it can then go and classify multiple, coffee cups and teacups according to color, etc. So that's what machine learning is all about. You train it in that way. Now, how I've used machine learning in my research is I've trained it to look at stock patterns, okay, stock market patterns, pick up patterns in the market, in the data, in the price action, in the volume. You can see you can give it a particular pattern that used to be predictive of a good stock price move, and say, go back, find more of these patterns in the market, test them and retest them, and come back with kind of settings for what type pattern, or what's the most successful high probability trade pattern you're looking for. So pattern recognition is something you can use in machine learning. And then deep learning is where you have a little bit more data, where there's an element of randomness, that the computer, it's not quite 0 or 1. The computer needs to take an educated guess as to, is that a 0 or 1? Because everything for the computer is still just 0 to 1. And then natural language processing, NLP, where we can now use that to read transcripts, 10Q filings. The technology is so advanced now that you can now in real time, the AI can in real time, when the press release or the Fed statement can come up, it can give you within a split second, it can tell you, how's this statement different to the previous one? Oops. How's this one different to the previous one? And what is the tone of it? Okay. And then you can take the AI a certain level further with facial recognition, and you can study with a very high-speed camera the facial features of, let's say, Jerome Powell when he does his press release, and you can cross-check that with, let's say, poker tells, where you've scanned, let's say, 10,000 people, a mix between people that lie a lot or not. So you can start giving an idea as to what's his facial micro-expressions in a Q&A, like, for example, so you will know, is he telling the truth or not? So that technology is also being developed, and the hit rate on that's not very high at the moment. It's about 70%. If they were trying to get it to 80 or 90% recognition of when a person might be telling a lie, for example, we've got that type of technology to deal with as well. So it would be interesting for those that do a lot of fund management interviews with the corporate clients to film them at the time, and then you can go back and look at what point to what question did the guy have a slight facial change to give you an indication if he's telling the truth or not. So we're in for some really tough times in the market, so to speak. Now, the AI market's expected to grow by just under 40% for the next couple of years. There's the penetration among companies is about very low. China leads the adoption in AI, with 58% of the companies there already deploying AI. 30% is considering it. The United States got lower penetration rate, 25 companies there, percent of the companies already using AI there, with 43% companies still thinking of doing it. Out of about 1,400 companies surveyed in the States, they spend about $50 million to get started on AI. So you can see there's a lot of money going into this already because of the high cost of getting it off the ground. So be aware of that high growth area, but there's quite a fair bit of risk that there's, it's going to take a lot of capex to get to that level. Big risk factor is work displacement, unemployment and things like that. A lot of companies at the moment are recruiting using AI to reduce the reliance on staff, and 25% say we can't get enough staff, so let's do it. Let's get an AI to fulfill this function. So a lot of repetitive tasks will be able to be replaced with an AI, and then people can be a little bit more making more informed decisions, etc. But a lot of companies have indicated that there's a lot of jobs, about 70% of the jobs they can do away with by replacing it with AI. So this will take time over the next couple of years. So governments are under pressure to see how they're going to cope with something like this. I mean, once again, it's all about the bottom line when it comes to a listed entity on the exchange. So, there's all those social dynamics and those problems that's going to come through. But the World Economic Forum says, well, we expect about 97 million new jobs to be created. But current estimates is for more than about 400 million job losses over the next couple of years. And that's going to have profound impact on the economy. That's going to have profound impacts on democracies as well. You can only see we have a very big transitional phase to get through. We know what the Industrial Revolution did to a lot of jobs, and we know what the computer and the PC did to a lot of jobs. And now we have an idea of what we could see what's going to happen with the artificial intelligence. So there's a big the tsunami of change heading our way. And we have to be a game changer within the investment community, because as it stands off today, your clients can already use off-the-shelf artificial intelligence engines to trade the stock market, and they can make 3 to 4 times the return of the market. Okay, so it gives you an idea. There's a race going on here between what us as the investment community can do and what our clients already can do on the retail level. Okay, so the technology is already there. It's not a pie in the sky. It's already there. I've been running it for 3 years, and the returns are about 3 to 4 times the market return. So you can see there it's a tremendous opportunity, but also a tremendous threat. How's the fund management industry going to justify our existence when your clients can already use artificial intelligence in the investment community? So just 7 main branches of AI. We're just going to elaborate on that, and then I'll open for questions. Machine learning, pattern recognition. I've been using that to scan for stocks and pattern recognition. So you give the AI, goes back into the database, looks since the beginning of time, as far as we got the data on the stock market, and it goes to identify patterns in stock prices, etc., and come back and say, this is a predictive pattern. We have a requirement of it must be more than 65% accurate for it to be, to be useful. We're not looking for something that's 50-50, because that's basically coin tossing. 65% accuracy is required. That's the minimum. And then we run that through the system. It comes back with patterns that are predictive in price behavior, and then you start screening the market, looking for those particular chart patterns, for example. This is pattern recognition is one thing. Natural language processing, NLP, that can be used in terms of, I was just looking at a video earlier. You can literally do your staff training in multiple language using a digital avatar, and can speak in all types of languages. So that you can do real-time conversation as well with, I speak in Spanish or English, and I speak to somebody in Spanish, and vice versa. So that's also happening. And computer vision, that's the other area. Robotics, Tesla, we're all well aware what Tesla car can do and can't do, according to Musk. And you see that computer vision is also coming into play. How do we use that in the investment field as well? We can use that once again to look at chart pattern visually, but you might not have something you can express mathematically. So you look at it visually, say, right, this is kind of a chart pattern that I'm looking for. Go back into 100 years of stock market data and come back, test it, and come back and tell me if it's more than 65% accurate. And you can do that within a couple of hours, okay? When I started developing algorithmic models, it took me about 6 years to test it and get it to work. Now with AI, I can do in a morning what I used to be able to do in 6 years. So it gives you an idea as to the power of this computing of large amounts of data. Okay. And that's where expert systems comes into play. I tell it, my TQS model has got these variables, go back in the database, search the data and improve on those variables. So the AI can come back and say, yeah, you're looking at this, and this, sales, margins, return on equity, but have you considered adding that component, that component, that component to the model? And that will, let's say, improve the odds of a positive return by like 50% or something like that. So that's what you can do. That's an expert system where you give it a predefined list of rules, and it goes on, improves on that. And then robotics is the other section. There's a lot happening there. The whole aging population thing is going to need medical care, and robotic assistance can assist in that. And knowledge representation and reasoning, there's your medical field there a little bit with scanning for the x-rays, brain x-rays and things like that can be done in seconds instead of waiting. The radiologist has to wait a long time to go through multiple x-rays, but he can always cross-check. So it's going to be disruptive in a lot of industries, very exciting about the medical profession, but very worried about what's happening in the defense side of things. I don't know if you all noticed a few days ago, I think it was yesterday, Bloomberg's it came out that the US government's already using AI in their drone strikes. So you can see where this is heading. So there's really big areas where AI is going to be, disruptive and have lots of change. And then planning and decision making is another kind of, where you do optimization techniques and things like that. So I've used the genetic algorithm in my AI strategies, where I've taken, it says, right, I'll explain a little bit later, genetic algorithm, a bit more detail after Q&A, but you go into the database and you come back and say, I want high probability investing strategies and trade setups. So that's in a nutshell where the fund management industry is going to be heading, because, we need these technologies. You can't ignore them. The ship has sailed, so to speak, and we need to be up and running with it. Now, already AI hedge funds, this is the AI hedge fund index, Eureka hedge fund index, is the artificial intelligence, machine learning indices are already outperforming the other normal indices, normal hedge funds. So you can see that there is definitely room for this as a additional strategy or an additional way to manage money or trade or invest money, because AI machine learning is already proving that it's outperforming the majority of normal stock picking type hedge funds. So it's very interesting. Beauty is, look at this annualized return of 10% on average, and you've got what? Annualized deviation of 6%. That's very, very low. I mean, my strategy's standard deviation, annual standardized deviation is not that low. But yeah, so you can see that machine learning is really working. It's useful in the market. Not every month is positive for these hedge funds, for example. I can attest to that. There are some months that, for example, the downturn last year in September, October downturn wasn't so good, so the real strong rally started back in November. So you can add seasonal factors into your models to account for that seasonality in the market, for example. But AI is going to change a lot of things. It's changing the fund management industry. You can have, digital avatars chatting to your clients. And I think the biggest problem is it's going to create a little bit of more inequality, because you're going to have the cost of getting these technologies off the ground is quite high within the investment community. And then you're going to have to segment your customers. Who gets AI service, meaning a chatbot and a robo advice, and who's going to get customized face-to-face service. So you can see the disparity in inequality is going to get quite large, and that's the other risk we have to look for. Any questions so far? Anybody a question? I can't see the questions.
All right,
Yes.
let me thank you first, and then we can then move to questions. There is one question for you. What are the waves of changes in the investment management field, and how does one become a game changer in the field?
Yeah, you have to leverage the technologies already, because you have two things. One is the fund's performance. Your performance of the funds, obviously your customers want to make money. They're not quite that worried about what's your asset allocation and things like that. They just want, it's all about the dollar amount at the end of the time and how you get there. And the artificial intelligence will help you define your strategy, and it will help you to put yourself in a particular niche, for example, So you need to look at how can you integrate these artificial intelligence engines, how can you incorporate the genetic algorithm, all part of your research. When I started out in the industry, I was doing a lot of, company meetings, 8 meetings a day, management interviews. They tell you everything's going lovely, and then 3 months later, quarter results come, they miss earnings. So then I started to realize, I don't quite like meeting these guys all the time because, they always tell you a good story. So what about looking at, mathematics, fractal mathematics and things like that to screen for stocks? So instead of these guys coming to me on the buy side saying, well, we've got this and this company for you, let's go and do top down and bottom approach at the same time. So we start with alpha. We start with alpha historically, which are the best performing companies historically. And then we work back through that to find the trigger points out there. Out of thousands of different data points, what are the trigger points that will bring you from the underperformance to the outperformance in the alpha? So you use something like a genetic algorithm for that example. So in some of my research, you use the genetic algorithm. It highlights a lot of data points and then comes back with, say, yeah, X, Y, and Z is the main factors that will contribute to this particular investment outperforming. So you have to incorporate machine learning into your analysis to stay ahead of the curve. You can then also service your clients with the ChatGPT or a avatar to talk to, just to do more normal kind of Q&A. They don't necessarily need to know it's an avatar or not, because there's some very good, I'll show you close to the end, some very good avatars that are not real, but they look pretty real and they can talk to you, to discuss things for you, etc. So that we have to invest in that technology to really get ahead.
And Richard, how can investment managers then effectively balance AI with human intuition?
Yeah, that's the
expertise that we have from humans, but more importantly now, we want to make sure that there is a balance there.
Yeah, so for example, when I do my stock research about the American market, for example, I look at all 10,000 companies. So it's not quite 10,000, it's 9,000 something, 500 listed. And we have data points about every single one. Okay, so you run your screens, you come up with a list of, let's say, 100 stocks that is met predefined criteria, because that's historically the best performing company, because we've now reversed engineered alpha. We started with alpha, worked back, so we know the factors on that side that will most likely generate a positive return or a return that outperform. Okay, so you've used machine learning, stock ranking, screening to produce that. So all that grunt work, instead of having 50 analysts that's doing the research on companies, you now have a list of companies that you can now go and research. Okay, not instead of keep, when a company is out of favor, and it's going to be out of favor for a very long time, you need to have an algorithm or an AI that will tell you when that company will come back into favor. Instead of wasting research on, having a full-time analyst or research covering a particular stock, you can now utilize your time focusing on other companies, because your machine learning has taught you that, right, none of these companies ever outperformed if they meet X, Y, Z criteria. But as soon as they meet A, B, C criteria, then it's definitely worth researching those companies at that point in time. So you can allocate your resources for your research department or your personal time as a fund manager a lot better by focusing. You've done your homework. You've done this, the genetic algorithm has identified companies that are ready to break out or starting to show improvements, instead of just wasting time trying to research a company that's never going to outperform at any point in time. So that you can define and segment. You can use the AI to segment your stock universe in that way. You can also then go in terms of portfolio allocation, asset allocation. You can use genetic algorithm technology to go into historically looking at how different funds portfolio allocation worked in time. So the AI can say, well, this is how the historic performance for these funds were X, Y, Z. Okay. Then the genetic algorithm can go say, the computer can say, okay, I'm going to test these strategies and optimize them. So it might come back with a very different asset allocation versus 60% or 70% equities, 30% bonds, etc. It might come back with something very different in terms of your allocation and how fluid that allocation has to be. Is there seasonality in that allocation, etc.? So you can use the AI, because now with AI you can really you can really cover a large amount of data. So the more data you've got, that's important. And that's the thing. Data is going to become a lot more costly. If you think a Bloomberg's terminal is expensive now, wait till it gets a little bit more advanced and things like that. Then it's going to be very expensive. So are you going to pay for data, or are you going to get it yourself? So some of my strategies I've tested on a particular, so I have an AI strategy. It works very well on stocks, but now I go ask the AI, okay, go and look only at Apple and come up with I call it a personality for that stock. Come back with the personality of that particular stock. So you can use the AI to custom make a trading or investment strategy surrounding a single stock, because you've used genetic algorithm technology, you've scanned the price history, you've compared that price history of Apple over time with every other variable in the database, and it comes back with a custom-made, high-probability trading strategy for that particular stock. Okay, so you can see, instead of just having, do I buy NVIDIA at a 33 PE now because your forward PE because it's looking cheap now, but the stock's extended, etc. So you can say, you can use genetic algorithm technology, say, right, I've gone back, I know from 20 million calculations that this strategy under these circumstances, you can buy NVIDIA at 33 PE or something like that. So you can't just have, this stock's cheap at a 10 PE and that one's expensive at 70, so you can see, you can go back and you can define that variable for your research in that. So there's a lot of work that goes into it. I have a futures trading strategy that's 94% accurate, trading the NASDAQ futures. Okay, but you have to always watch for the black swan event. Okay, there's always a black swan event that's coming out of some point, of some direction, and we're not sure what those black swan events, macro events, are going to be. Is it going to be an escalation of the war in Ukraine or the Middle East, or what it is going to be? But I think, you have to keep in mind black swan events, and then you can start asking the AI, says, can you work in extreme volatility into the model to see where, how the variables change?
All right. Let's talk risk management now, Rich. How can AI application predict and manage financial risks, credit risk, market risk, and fraud detection?
Now, I just want to get to there's an interesting company in the States, to get to the genetic algorithm. Where's the graph? Yeah. So there's a firm, is an interesting credit scoring company in the States. Now, you can see how they're using AI. It's quite intrusive, actually. So they would look at, so you have your standard credit scoring, let's say from individual person. You can do that from a corporate perspective as well. So then you have standard credit scoring. And credit scoring also works in terms of where you live. But what they do is they go further than that. Which university you've been, which school you've been, who your friends, so you can see, so they start ranking people on that basis. All right. So you can now, if you want to look in terms of your business investments, credit risk of a company, you can now, with the right amount of data, you can now starting to say, where did this chief executive go to school? Where did he grow up? That type of thing. You can start working all those type variables into the model to see at some point, is this chief executive of this company going to do something that's going to make that stock blow up? Too much debt, maybe, things like that. So you can also monitor at what point in time will they take a decision that's going to change that. I love monitoring the difference between the pro forma earnings and the gap earnings of American companies. Now, a lot of tech stocks rely a lot on pro forma earnings. They don't really rely so much on gap, because the gap, there's always a big gap between the pro forma and the gap earnings, you know. So they kind of can manipulate the earnings. So you can get a feeling as to when are they manipulating the balance sheet and the debt to and how that contributes to the earnings. So you can feed that data into your artificial intelligence engine, say, well, come back, tell me what is driving Apple's earnings right now. And it will tell you, well, it's actually stock buybacks. Because ever since Apple's been announcing stock buybacks, almost all of the earnings comes from reducing the amount of shares in issue. So you can see it's a financial engineering stock, Apple. So you can do that for companies where you look at the quality of the balance sheet, monitor that on the extreme microscopic level, because you can see what are the suppliers doing. That's part of the genetic algorithm. Let's say these are all the factors that can impact your stock, for example, okay? And with AI, you now use genetic algorithm technology to say, can you go back and find out which factors are the most predictive? And it'll come back and tell you, right, X, Y, Z, these, as you can see on the chart, that's the most predictive ones. Stuff you would never have thought about, okay? There's some really weird things people are looking at. Planetary harmonics, how's that affecting the stock market as such? So you can see how far this is going, how far down the rabbit hole this is going. But in terms of credit risk, trying to see if the company's fudging the numbers, you can use that by looking at the company, the suppliers, and AI can monitor those things. So if a press release comes out and one of your suppliers got problems in the company, how quick might that translate to a problem for this company, a problem for this company's credit and debt, etc. So, you know, you can use that, but you need a lot of data, and, you know, it'll take time to access all that data and get that data sources together. But the genetic algorithm is really one way to do that. Use masses of information and then reduce that to something that is a high probability that'll give you an idea that there's a problem somewhere.
All right. I have few other questions that are coming up. Richard, just to warn you, we have 10 minutes now to go.
Okay, good.
A few more. Can AI be extended to other asset classes like fixed income, FX, or not?
Currency, yes. Currency trading works very well. AI works very well for that because you have a lot of data points. I have got a good currency, AI running on the FX market, for example, on the major currency pairs. Once again, it's used genetic algorithms. So you can use that on currencies. I haven't done much personally on the bond side of things. I'm not really a debt instrument investor, but I have seen some models where you can look at, particularly in the credit risk, credit scoring, things like that, where they look at, like I said earlier, the variables in how what's happening on your the company's customer level, and how quick will that impact, the probability of that impact hitting there quicker, because at the end of the day, price really leads the actual, the figures of a company. So you can start seeing historically, the AI will say, well, the bond prices here have changed on the corporate bond, for example, but before that XYZ changed. So that tends to be a recurring theme. It's predictive in nature, you see, so you can have those things. So you might have a variable that you never thought of that can affect the bond price of your corporate bond, for example, the credit risk. Yes. So it definitely can be used for that.
What opportunity exists for disruptive innovation in investment management through the integration of AI with other emerging technologies, such as blockchain?
Yes, what's interesting, I didn't get to that slide. Speaking of the blockchain thing, there's a interesting dynamic here, because what's going to happen if we have a lot more of these AIs doing the same type of calculations? Are we going to really have a situation where you can generate alpha, or is this a situation for the next couple of years? There'll be a brief period where people make a lot of money, but then everything just collapses. Alpha just collapses into a beta, a natural trending beta, because all these machines are doing all these calculations, and the price disparities are really taken out of the market pretty quickly. The inefficiencies are taken out of the market pretty quickly. So I think that's a key thing to bear in mind, that we're not sure how that's going to pan out, because Bitcoin mining, for example, the blockchain, if you mine, you get a coin if you successfully guess the answer to the mathematical problem. So it's kind of a gambling stock, basically. Bitcoin is kind of more gambling. You're guessing the answer. So is that going to happen to the stock market, where all these AIs are going to kind of try and capture the inefficiency in price movement? So if you've got the most computers, the most powerful computers, quantum computer, are you going to be the one that's making the money for that, when the rest of the people are just going to fall behind? So I think that's the big challenge for the industry is, are we going to create a real alpha, or is alpha just going to collapse into being beta, as all these computers are chasing the same type trade setups, for example?
Can AI be leveraged to integrate ESG factors into investment decision-making processes?
Oh, yes, they're very interesting on the ESG side of things, because a lot of companies are now very aware of the supply chain security, supply chain, if it's ethical. I don't have kids working, somewhere assembling my car, for example. So they are working on blockchain type technology that you can then track the supply chain all the way through. So it will be possible in the near future to have an ESG ranking for a company. So yes, I can do business with this one because its ESG ranking is true. I can track the supply chain all the way from where the product was mined right through to where it was put in a Tesla vehicle, for example. So that supply chain security, as well as the ESG aspect of that, the blockchain is very suitable for something like that. And that is already, in the process. There are a few companies working on exactly that type of technology. So when that data becomes more available for you as fund manager to decide, well, I'm having an ESG fund, but I can't put Meta in there. You can't put Facebook in there because it's practically, the social negative impact of Facebook on the youth is a very, very bad thing. So, it's difficult to put that one in. But if I put Tesla in there, and Tesla can fix their supply chain and not having any questionable labor practices along the way, then you can start seeing that secure supply chain, because it'll be in a blockchain format, and you can immediately see, oh, this product shipped from there, it's gone all through the way, and it's a clean supply chain. And I think that for fund managers and corporations is going to be very important. Apple's had a few embarrassing things where young children are assembling some of their phones. Tesla's got some questionable mining links and things like that. So all that can be sorted out over time. But yes, the technology is there, for fund managers to even utilize that to make sure their ESG funds are clean, because there's a lot of, greenwashing in the ESG space.
What specific areas within investment management stand to benefit the most from advancement in AI, and why? Is this AI all hype now, or for real? That's the question.
I think it's early stage for the investment community. You're going to have to spend a lot more money to get into the. I'm just trying to find a slide where I mention that. There's a fair bit of hype at the moment, but we already know that what we can do, we can already outperform the market using genetic algorithms. So that's there. Your customers can already outperform the market using genetic algorithms. That's the challenge. So you're going to have to spend a lot more, in CapEx, and then how you service your customers, the robotics, the synesthesia, all these artificial intelligence, humanoids can be used in customer service, helping customers with queries and things like that. Because when you have a pension fund, etc., and customers got problems, do they chat? Do they talk to somebody? Is there somebody to talk to? You can leverage that if you get a lot of calls and things like that. The first port of call can be an AI or a robotic chat thing. So that they can use that within the investment community. But I think the race is on. At the moment, the high frequency intraday guys is very well established. The fundamental fund management industry will probably need to use a lot more genetic algorithms in their top-down and bottom-up analysis. And I think research is going to have to be, research is going to change with ChatGPT, can really do real-time research monitoring of the internet and come back and say, well, what's happening there? So you can start using the artificial intelligence chat GPT, for example, to find trends in the market that's happening out there that you might be missing otherwise without using artificial intelligence. So you can imagine the biggest benefit is for the fund management industry is this large amount of data that we can now process and use to capture inefficiencies in the market, and then also use these advanced technologies to give a better customer experience and to reach out to our customers. We can segment the customers, who gets what, etc., in terms of value. The 80-20 rule, 80% of your profit comes from 20% of your customers at the end of the day. That applies to a lot of the AI algorithms as well. But it is possible to use these, already use these AI interactions to give better customer service, better tailor-made, portfolio allocation. If your client's got a fund and they want to do their own portfolio allocation, the AI can come back with a few suggestions, can also tell you how successful that particular strategy might have been in the past. So you can utilize all these existing technologies just to give a better customer experience and help to retain clients and grow your business.
You have 1 minute to answer this one, Rich. Can you please touch on your results since you launched your TQS in South Africa last year?
Yeah, so we have a quick one. This is a TQS. This is now the benefit of having a highly quantitative approach to, top-down approach to find the best, particularly. This is where we kind of reversed engineered alpha. We start with the best performing companies and worked our way back. So the last couple of months, we've launched some research pieces through Sinayo, and the actively managed portfolio was up about 25%. The cybersecurity one is up 16%. Cybersecurity is going to be a big thing. We're going to dedicate a whole webinar to that in itself in future. I didn't even touch on it here because that's a huge growth area in the market. So that's definitely something to look at. So you can see the model does outperform the major indices, but you do need to add the market timing model into it. It's fine just to have top performing stocks all the time, but you need to make sure you buy them at the right time. So you do incorporate things like seasonality and things like that. Yes, the model performance on a seasonal basis. So we look at when the rally started, beginning of November last year, how did the model perform going into up until February? So you can see we've had some really good returns coming out of that. The large cap stocks, the mid cap stocks, both outperforming the overall market. So yes, it's important to have those, to time your entries as well according to the model. Because once again, we went back to say, right, what works in the past? Is it predictive in nature? Can we rely on it? And we come back with the AI, and it helps us in that manner.
Thank you, Richard. Thank you, all of you, for joining us today. And thank you for your active participation and insightful questions that have made this event truly, truly engaging. We appreciate your time and commitment to exploring this fascinating world of AI. Just one more thing before you switch off, mark your calendars for our next Sinayo Talks webinar, where we will delve deeper into this exciting topic from a broader perspective, encompassing now futurism, economic impact, and legal opinion on the need to address and protect human rights in the face of a rapidly changing environment. It is on Wednesday, March 13th at 2 p.m. We will host a distinguished panel of guests who will continue the discussion, providing a broader perspective on navigating the future. Keep an eye out for the invites tomorrow morning. Sinayo Talks, Navigating the Future. We look forward to having you with us again. Thank you, and thank you very much. Enjoy your day further. Goodbye.
Thank you very much. Bye-bye.
Bye-bye. Bye-bye. Thanks, Rich. Thanks.